Hello, everybody. I'm your host, Derek Bird, here at StopStrugglingNow.com. And today we're talking about getting in the game. That's right, the wealth game. I've been talking about this for the last 2 to 3 weeks. The other day, yesterday, I said, check out these stocks. Last week, 2 weeks ago, I said, check out these stocks. We're going to go in a little review, but get your free shares of stock simply by signing up using Webull or Robinhood links down in the description. We're going to get into it, and welcome. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. We're going to get into it in a moment. Tifosi Optics, check. Oh, new gear, CEO of my life. That's right. Go to StopStrugglingNow.com and go get that SSN merchandise. Use promo code 2020 for a certain percentage off. I don't know the amount. It's either 10%, I believe. So anyhow, 100% soft cotton. Feels good. Anyhow, I'm going to go back onto the screen. We're going to talk about XOM. That's Exxon. We're going to talk about Ford F. We're going to talk about a few other stocks that we were talking about before. CCL, Carnival Cruise Lines. RCL, Royal Caribbean Cruise Lines. That's right. Some of you might have taken advantage of this. Some of you might have earned 20, 30, 40, 50, 100% on your money in a 2-week period. That's right. Some of you might have been lucky enough to take advantage of what we were talking about a week ago. Are you a risk taker? Are you recognizing that opportunity knocks? Like I said before, these are the times that millionaires are made. Let's get to it. We're going to go on the screen.
Ladies and gentlemen, you can see we're on the Stop Struggling Now YouTube page, and we're over 4,800 subscribers. I want to thank everybody. Thank you for your support. Thank you for watching the videos. Thank you for your comments. I really appreciate it. Any input is always appreciated. So let's start off here with 2 days ago. Well, on here it says 3 days ago, which is 5 days ago actually. Get late payments updated. For all you who are having difficulty during this coronavirus time, you should be contacting your creditors, your lenders, whoever you have loans with, trying to renegotiate or get deferred payments if you need it. Even if you don't need it, you may want to do deferred payment because you don't know if you're going to be laid off in the future, and you could sock some money away just in case. Instead of paying it now, you could sock it away, so just in case you do get laid off, you already have your deferred payments or delayed payments already in place. And also you can get your interest rates possibly reduced, or you can get more favorable terms, seeing how the Senate and House, they passed a bill where there's $2 trillion going in the hands of these corporations, and now they feel happy again. So let's get into it. I'm going to do something of the reason I mentioned this 5 days ago. I believe this is the video that I'm standing in front of Dave & Buster's when I say at the intro that Dave & Buster's is closed down. Their stock is probably going to fall or has already fallen. And I'm saying this is a good time to pick up a few pieces of stock, a few shares of stock on this. And I'm going to go down a list because we've been talking about building wealth for a year, year and a half. And we always talk about the 7 streams of income. And part of them is dividend income, which you can receive from shares of stock, such as Carnival Cruise Line, Ford, if they didn't suspend their dividends. But anyhow, they normally give dividends. So these are the type of stocks that you would have dividend gains from. And then you have capital gains, is if you buy a stock similar to Tesla, where Tesla doesn't give you dividends, but the price goes up, which recently happened when it went from almost $350 up to $950. That $600 difference is called the capital gains in this case, and then you would have paid a tax on that, but that capital gains tax is lower than if you work as an employee. So the key nugget here is if you work as an employee and you get a W-2 and you earned, let's say, $60,000, then you may be subject to around a 20%, 24%, 25% tax, whereas capital gains could be 15% or less. So right then and there, that 7% to 10% that you saved on being taxed, remember, taxes take your wealth away. So the wealthy, because they have capital gains, they pay a lower rate of tax. So wouldn't you rather earn money on capital gains? And in fact, that's money that you didn't even have to work for. It's making money while you sleep, making money while you're on vacation, making money while you're doing whatever you're doing. And then whenever you determine to sell it, which could be years later, it could be months, it could be weeks, but it depends. It could be years later. All the prize, the appreciation in the stock price, that means that you have a capital gains. Now, if you have a stock that's similar to, I'll use an example that I'm about to use shortly, where you had Carnival Cruise Lines or Royal Caribbean Cruise Lines. I think that's the one that I'm going to have up. But let's say it was Royal Caribbean Cruise Lines and you were lucky enough to buy it at 20, I don't know what the low was, but 29. And then it went up to 39. That's a $10 gain. But all along, they were giving dividends. And so let's just say I bought $1,000 worth of Royal Caribbean shares of stock. And that price that you're talking about, where their dividends are, I don't know what they are, but we'll get into it later. But whatever their dividend is, let's say it's 10% based on the $29 share price that I purchased. Then right now I would have the dividend income of an extra 10%. So then that $100, that's a dividend income. You follow what I'm trying to say? So that dividend income is also going to be taxed. But again, dividend income is taxed most often in single digits. So it could be 9%, 7%, 8%. Again, you have dividend income of $60,000. You might only pay tax $5,000, $6,000. You have dividend income from your employer for a W-2, you're going to be paying $10,000, $12,000, $15,000, depending on if you're single, married, head of household, things like that. So these are the kind of things where the wealthy get to continue to stay wealthy, and they're investing in other things that normal people don't invest in. And this is why I mentioned this before. The top 10% of income earners own 84% of the stock market. There's a reason. Their tax liability is so much lower than being an employee. That's why you have to run your own company, get an LLC, so then you can write yourself out as a dividend or draw, and you reduce your taxes because you're not saying you're an employee on a W-2. That's how it works, ladies and gentlemen. You can't hate the game. You got to be in the game. Anyhow, Webull, as you can see up here, 2 free stocks. Here's how this works. It's in the description down below. I have the link to Webull. All you have to do is sign up and register within 24 hours. What I mean by that is you sign up, you fill out everything, you confirm your email address. That counts as registering. Just downloading the app and filling out a few things and not confirming your email address does not mean you're registered. You just have to register. You don't have to put any money in. That's how you get your first stock. You'll get something on the app that says in about 3 to 4 days later, there'll be something, and you have to claim it. You have to accept the free share of stock. Then it'll be in your account. And if you don't accept it within 30 to 45 days, I don't know if it's 30 days or 45, then it goes away. So you lose it. Then your second stock, how you get that is if you upload money into Webull to do some trades. And all the trades are free. There's no commission. You got limit. You have information back there. That's why Webull is actually kind of cool, because they have information for people who are into the stock market a little more heavily than if you do a Robinhood. So they have more indicators. They have a lot more going on at Webull. If you want something simpler, Robinhood also is free, to trade, no commissions. They also give you a free share of stock, so you can sign up with them as well. Nobody says you have to be on one platform, but you get a free share of stock, and it's the same thing. Once they issue the stock, you have to go into the free stock and accept it or claim it, and then it'll come down. And again, it takes 6 or 7 days after you sign up. It'll be in there, so you have to go back in and look, and it'll be in there. And again, they're on the same similar type of thing. It'll be there 30 to 60 days or something, and if you don't claim it, it goes away. All right, let's get to it. So a couple of days ago, if I never mention this too often, but on YouTube there's a community tab, and sometimes I post in that community tab, and almost every day actually now, because I realize people are actually get the notifications. So this is what I posted. This says 1 day ago, but in fact it was on the 24th. And unlike other so-called gurus, now remember, this is no guru zone. I'm no guru with the stock market. I'm not a financial advisor. I'm not a planner, do anything like that. I'm just an individual that likes to make money. Entrepreneurs, they call it now. But this is what I posted on the 24th to let everybody know, because I talk about the velocity stocks. Those move so fast depending on if the stock market goes up and down, and so therefore you have to be in and out, kind of take your profit and run while you can. And then when you take that profit, what do you do with it? And that's when I always say, put them into companies that give you dividends. It's even better if you can get a Fortune 500 company that gives you dividends. So here's what I did. I posted up on the 24th what I'm buying. So I'm buying GT, which is Goodyear. This is Viacom, CBS. And there's reasons for each one of these. I'll briefly, Viacom. They have like March Madness, CBS. They obviously, their stock is depressed because they don't have March Madness. They don't have any of the sporting events. Revenue from advertisers is down, of course. So of course their stock market. NRZ is residential properties. People were anticipating that because of layoffs and things like that, that they're going to go down. This is Ford. They're shuttering manufacturing facilities because of the coronavirus. RCL, boats are on dock. So obviously nobody's going on cruises because of the virus. And then XOM is mobile. And of course there was a price war between Russia and Saudi Arabia. So the crude oil prices went below $30 a barrel. So again, that was going on. So I posted this, and along with WFC is Wells Fargo, Tesla, Apple, other bank stocks and oil stocks, and this is gold, and that's Boeing. 2 days ago, BA is Boeing. I mentioned all these, and I didn't put Boeing up, but Boeing has basically doubled in 2 days. So anyhow, we're going to get into that. And I just want to show everybody, this is what, if you're not part of the Facebook group or the Facebook page, please go and sign up in both, or one or the other. But as you can see here, it says March 24th at 10:43 a.m. I posted that same information I posted in the community on YouTube. I posted in the Facebook page and Facebook group so everybody can see. I'm not like the gurus who say this is what I did after the fact when you have no verification. I posted what I was doing that day, so now you can actually track and see for yourself what actually happens. And you can go in and say, okay, I see where lost some money, or you can go in and say, I see where they gained some money. And then you can gauge if your risk tolerance, what it is. You could say, well, would I sell now that it went up 10% or 20% or 30%, or will I just let it stay there? And oftentimes, if you can buy at a great price, remember, when you enter the market, whether you buy a house, multifamily properties, whether you buy cars, whatever you buy, when you buy that particular asset or liability in the case of car, but whatever you buy, that's when you know you make the money. So in other words, what I'm trying to say is I'm getting a multifamily property, and let's just say it's $1 million, and let's say that's at the very top of the price for what I'm buying it for right now. Well, then you have to figure out, even if it is at the top of the price range that you want to pay for it, in the future, will you be able to increase the rents? So if you can increase the rents, then that property value will go up over time. So therefore, it may be worth buying it at the top of your range. But if the rents are already at the top of the market and you're buying the property at the top of the market, there might be a problem if there's a downturn in the economy and now you done paid top price and you have less renters and you can't raise the rent. So these are the kind of things. So it would be a better deal if you could have gotten the property for, let's say, 10 to 15% off, 850,000, 900,000 with a value of $1 million. So that way, and your rents aren't at the top of the market, but halfway through the market. So now your occupancy rate might be higher. So these are kind of things you have to think about, and that works the same way with stocks. Except stocks, when they have dividends, which is what I like, dividend stocks, you can buy it and you already know, like, get something from Dave & Buster's. When Dave & Buster's Signia is PLAY, P-L-A-Y, that's their stock code. And here's a perfect example. 5 days ago was around the 21st or 20th. And you can see their stock price was $8, $7, $7.61 on the 20th. And then it moved later in the day on the 20th to $8.25. Then it just fluctuate between $7.50 and $8. Now, let's go to the 21st. It bumps up to that's the 23rd. Oh, that was the weekend. So then you would have had to do something between. But on the weekend, let's just call it 8:36. You came back on Monday and you saw my video 3 days later. And you said, man, Eric mentioned this Dave & Buster's stock. So it's 3 days later, it's 8:36, let's say, and you bought it on the 23rd. You're still fine. Because as you can see in real time, today is the 26th. You see right now on Seeking Alpha, it's $16.69. Now, 836 plus 836 is 1672, I believe. That means if you would have put $100 down on Dave & Buster's, you would have $200 in your account today. Plus, they have a dividend. And they give, it looks like 64 cents per year, which is, divide that by 4. So they're roughly, 16 cents every 3 months that you receive dividends on. Now, when you would have bought this at $8, let's say $8.36, your dividend yield, instead of being at the $16.69, it's 4.4%. That's what you're earning on your money if you buy at $16.69. Half of that meant you were around 8.88%, earning 9% on your money. So not only would the $100 now be $200, that same $100, which meant you could have bought about 12 shares, somewhere in there, 12 times 64 is what you're always going to earn on your money. So for every $100 you would have spent, you get about $8.80 a year, something of that nature. I haven't done the actual real numbers, but I'm just going off the top of my head. So now you can see why the wealthy make a lot of money, because the wealthy would have said, give me $5,000, give me $10,000 of that. Give me $20,000 of that, or 100, or a million. And what would have happened? Their money would have doubled. So whatever you put in, the more wealthy you are, the more you would have put in, so the more money you would have made. And now you would be sitting there saying, let's just say you did 10,000. So now you're sitting there earning $880 every year on your money. Not only that, you're giving dividends off and you're reinvesting in the shares, so the net realization could end up being closer to 10% after it's all said and done on your money. And that's a lifetime on your money as long as they give out dividends. All right, so let's keep going. I'll keep referencing. I'll only reference the ones that I mentioned here, so that way you guys can see what we're talking about. And GT is Goodyear, and on the 24th, which was or it doesn't matter. Let's just keep it around the 24th is when I mentioned it. Yeah, that's when I mentioned it based on the YouTube and Facebook group and page. So you can see on the 24th we're at $5.64, $5.53, $5.69. So again, we're in this $5.70 at 10:20, $5.68. So we're in that little ballpark. And some of you may say, hey, that's not $5.68, $5.70 to $6.42. You might be going, that's not that much. But think about this. Why be greedy? This is something where it moved, 80 cents? 70 cents? 70. If you bought something for $5.60 and it goes up 70 cents, that's more than 10%. So you really gained 10% on your money. You can't get that at a bank. This is how people who have a lot of money are able to just make more money, because these little moves, if you invest $1 million and it moves 10% and you have $100,000 of capital gains, or capital gains, okay, fine. Give me my $100,000, pay the 15% capital gains. I get out of here $85,000, low risk, less than 2 days later, and I'm gone. Or you figure, since the stock market has dropped so much, I'm just going to stay in here. And as you can see, today, if you bought at $6.42, look over here. The dividend is 10.83%. It's almost 11%. So actually, I was going off of the last one. So in essence, if you would have bought at the $5.60, $70, $80, you would have been earning 11% on your money. So out of $1 million, the guys get $110,000. They're not going to mind giving up the 15%. 90 grand? Come on. In 2 days, the wealthy. You can do this, and you don't have to be wealthy. $100. Sure, it's not as sexy when you say, I made $11. Not as sexy. But the fact of the matter is, you're not making that anyhow at the bank while you're sitting there leaving your money sitting there. You might as well take a little risk. And these are minor risks if the price actually is below market, which it could be. Who knows? This could be like the 1930s stock market crash, where it kept going down, and then there'd be days where 2 days in a row it would seem like it's rising up, and then it will drop twice as much, and then it'll rise up for 2 or 3 days over the course of 2-3 years. Who knows? We could be in that situation, except there's one little difference. Back then, they didn't have a Federal Reserve System that would just buy up all the debt and forgive loans and mortgages and what the banks owe, and just say, we'll just, whatever you want to buy, we'll just back you up. You don't have to worry about it, and write or give them a blank check. That didn't happen back then. Right now, they're giving a blank check to almost everybody, the major corporations, so they don't have to worry about their IOUs. Maybe it'll come back to haunt us, which it should sooner or later. But as for now, like I'll keep saying, one percenters don't lose. And they're making sure of it. So I'm just letting you know. So anyhow, this is why sometimes you hold shares of stock, because you're saying I'm earning 10% on my money. Can't put it in the bank. We're at 0% interest rates. Unless, of course, you have DCU Credit Union. And they're still trying to give away. I didn't go in yesterday, but as of yesterday, they were still giving 6% on your money up to $1,000 deposited in your savings account. And if you want that, hit me up at Eric at StopStrugglingNow.com. So then that way, I'll send you a link, a referral link to sign up with DCU, and you can sign up and also get that first 6.17% on your money for your first $1,000 deposited at DCU. All right, let's move along. The other one, Viacom, CBS, on the 24th. Once again, let's see where we're at here. 12 on the 24th. It started rising, 13. So it started going up. Today it dropped 1%. So we're back at 13.52. So basically, if you'd have bought on the 20th, you're almost where you are. If you'd have bought on the 23rd, you would have a little more upside. But once again, this is a dividend stock. It's CBS. And it's Viacom. They have shows and things like that. So they can figure out how to do their streaming, how they can do other deals. So you can see here another dividend. And today, at that price, it's 6.51%. Again, where can you earn this on your money? They have a huge upside. Just my opinion. I'm not a stockbroker, stock agent, financial advisor. But again, when things get back to normal and their sporting events start coming back, they can start charging advertisers again, all that for TV. Well, they should be back. Because, see, no March Madness. They have March Madness. So, these, again, this is why I mentioned it. Yeah, it had a nice little run up to 15, whatever. So, if you'd have bought on the 24th, you could have did $2 a share. Again, that would have been 10% on your money, 15% on your money. You'd be happy. Some people sold, some people didn't, some people held. Like me, I'll just tell you straight up, I just held it. I'm not getting rid of it because it's so low that it's ridiculous. At the time, still is. So you can see their 52-week lows, 10, 52. So let's go to NRZ. NRZ is interesting because I mentioned this before when it was a higher price. 780, maybe 780, whatever. The reason why I mentioned it before is because they're dividends. Look at this. Their dividend over here. At $6.95, as long as they give out dividends, which their dividends are $2 per year, 50 cents for every share of stock you own every 3 months is what you receive as a dividend. And right now, 43% dividend yield. So, of course, that's at this price. Over here, when it was $8, it made it, about 30%. So this is why I was interested. But here's the thing, dollar cost averaging you may have heard of before. So let's just say you bought at $8.15. Then let's just say you buy the same amount of shares at $6.95. Let's call it $7. The difference between the 8 and the 7, let's call it 50 cents. This is just roundabout. That means now your dollar cost is down to $7.50. So that would help your yield when they give you dividends, because your stock price, in essence, when you average it together, is a lower amount. So that means you're earning more money or more interest on your money. And as you can see, on the 24th, when I mentioned it, it was only around $4.78. So you can only imagine at that point, if you get $2 per year on dividends, if they're able to keep that up, you're earning closer to 50% on your money. You're more like 46, 47% on your money. And you can see you had a day or two where you could have gotten it under $5. So And in fact, another shout out to the same person I gave a shout out to before, Curtis Davis, because he sent me a message on the 24th on YouTube in the comments section and said, man, I lost 68% on my NRZ. And I responded something to the effect of, yeah, I know, but I'm still holding. And there's a reason. Because if the economy does in fact get better, not worse, it's going to get worse for about 3, 4 weeks, 5 weeks, my estimation, could be longer. But they have hundreds of millions of dollars sitting around in cash. So they should be able to handle this situation. But once this becomes a stable environment again, where people are back at work and they're renting and doing their normal residential things, then their price would even increase more. So now you'll be able to get appreciation from the stock price. Plus you've locked yourself in to earn 30, 40, almost 50% on your money depending on when you bought it. And you can't beat that anywhere. So this is a little more riskier in my opinion, but hey, like I said, these are the times millionaires are made. You got to take a risk when the advantages are there. What else did we talk about? Ford. I've been talking about Ford for who knows how long, because they've always given that 60 cents dividend for their low share price. And once again, on the 24th, again, here we are, $4. Even at the $5.45 price, their yield is over 12%. Imagine if you would have gotten in on 441, 445, 460. That means your return on investment is a lot more. That means it's almost 20% on your money, especially if you'd have been lucky enough to be around early morning on the 24th at $4.40, $4.40, $4.30, $4.45. Again, Ford has suspended or has considered suspending their dividends. So you're going to have to watch out on that. But in my opinion, it's a win-win. Their stock is so low that it'll probably go up. But at the same time, if they don't give out dividends, their stock price will increase $1 or $2. So again, even if it increases $1 and you only bought it for $4, that's 25% on your money. You understand where I'm going with this? There's more ways to skin a cat. So, and in fact, like I said before, some people would say not giving out dividends, which is from their profits, is a good thing, because then they can just keep that money in-house and use it to improve their product line or keep their employees or whatever you want to call it. So these are the kind of things that we think about. Let's get down. Cruise lines. Royal Caribbean. Everybody was mocking me. Not people here at Stop Struggling Now, but some other people that I talked to around the internet mocking me for getting cruise lines when I mentioned it on the 20th in a video. And they were saying things such as, this is a first. A guy is basing his investment decisions on a bailout. And I said, exactly. What part of one percenters aren't going to let other one percenters fail? They're going to obviously cover them. So get yourself some CCL or RCL. And I told them I prefer RCL at the moment, even though I have some CCL as well. Well, as you can see, RCL was at around the 20th, $25, $27, $25, $23, $23. Now, on the 20th, if you would have been watching the video on the 20th, then you would have doubled your money. Again, that's 100% on stock price. See, some of you don't understand what's going on. This is how the wealthy one percenters keep making a lot of money. They're knowingly going to bail themselves out. They're knowingly buying the price when it's down here, millions of dollars. Again, $1 million on the 20th. They say, well, I think I doubled my money. $2 million on the 26th of the month. Yeah, I'll give you your $150,000. I'll take my $850,000 and go buy another supercar. Come on. This is how they do it. If you want to be in that game, again, you got to get in the game. And you can start with $100. And the same rules apply. If you would have invested $100, you would have $200 today, plus the bonus. Imagine this. $47.90 of RCL, Royal Caribbean Cruise Lines, earns you 9.05% on your money today. If you would have bought on the 20th, it would have been half of that. So therefore, you would be earning 20% dividend on your money. They pay out $3.12 every year per share. So you start doing the math. So the guy that said, I bought $1 million, even if he said he didn't want to sell it, at the end of a year, he got $3 per share. I don't know what that would be, but what, about 200, what is that, 250,000 shares? Or is it 5,000? Doesn't really matter. Whatever the number is, I'm not going to go through the numbers, but it's a number that you would times it by $3.12, and you guys can do it yourself. So then you can start figuring out how you figure out what you're going to earn. But that money is going to be taxed at a lower rate, under 10%. So again, he's not paying W-2 money. Again, this is how the wealthy avoid taxes. And I won't even get into some other tax situations because that's another time and another place that could even reduce it even more, depending on where this money is being kept and where it's being managed under. You could even have it a lower interest rate, a taxation on it. But anyhow, let's get down. So if you would have saw the video 2 days ago, on the 24th in the morning, 33, 33, 36, 39 even, 36. So let's just say 35. So again, you had opportunities, 36, 37, 35. 2 days ago. Now it's 47, 48. It went up $10 per share. Even at that time, who doesn't like 30% on their money? Who doesn't like 25% on your money? If you wanted to sell, instead of letting it ride for the long term. So, me personally, letting it ride for the long term. Other people might say, I'll take 20 or 30% on my money and go off into the sunset. Because there's nothing wrong with 20 or 30% on your money in 2 days or 3 days. So there's no right or wrong, because you could go down 10 or 20% as well. And do you have your risk? Does it allow for you to let it drop down? Just like what happened previously. People who have a 401k right now, who, again, my friends who had that $1 million, 1.5 million, as the stock market went down 30%, they were down at $1 million. Your 401k is not liquid. So they couldn't just sell when it went down to 1.4 and 1.350. They couldn't just push the sell everything button. They're locked. It would have been nice if they had their money and they could have just said sell all of it. And then they could have re-entered the market at these lower rates and gotten that and a hell of a lot more back. But this is why the wealthy continue to be wealthy, while the W-2 worker who listens to these grandma, grandpa, and everybody else who through one time would get their 401k, who would get their pensions, they didn't have to worry about it. Now you wish you would have had that 1.5 liquid, because you would have sold it after you lost like 10 or 15% and said, okay, we'll figure out this later. And then when things got down ridiculously low, like yesterday, Boeing, which is BA, on the 24th, Boeing was like under $100. It was like $95, $97. And now today it's at 170 something. So these are the kind of things that you could have taken advantage of, and you would almost have doubled your money. I'm not saying you would have put everything, your $1 million in Boeing or $1 million in Royal Caribbean or $1 million in some stock, but you might have said, hey, let me take $200,000 or $300,000 and buy Boeing right now, or buy Disney right now, or buy Royal Caribbean right now. And you would have said, okay, I made back my 20%. I made back 30%. So you would be happy with making $100,000, $200,000 on your money. So these are the kind of options you do not have when you have your money locked in a Vanguard, when you have your money locked in a mutual fund, a hedge fund, a 401k. That's the difference. And you're not paying 1% per year for having them watch your money, or in some cases 2% or 0.5% either. So these are the things you have to think about. You could do it yourself. And by the way, there's tax implications. I meant to show that today too. I guess that'll have to be another day. But keep in mind, go look on for all you W-2 workers, and you don't have to be a W-2, on your tax form, just look at a 1040. And you'll see that there are deductions for investing in a 401k or a or an IRA. You get up to $6,000, $12,000, depending on your, what you file as. And so in essence, if you have a W-2 and you invest $5,000, that's tax deductible. $6,000, that's tax deductible up to that amount. It's tax deductible. So $100 is tax deductible, $500 is tax deductible, $1,000 is tax deductible. Start thinking about keeping your wealth, ladies and gentlemen. Most people just accept taxes, quote unquote, be patriotic to pay your taxes. Meanwhile, the 1%ers and corporations are going, what's patriotic? Patriotic is not paying taxes. Remember, dumping the tea at the wharf, taxation without representation. Remember, that used to be a thing. 1%ers don't believe in paying taxes. W-2 and the poor are told be patriotic and pay taxes. Come on, wake up. All right, we talked about Exxon, XOM as in Mary, on the 24th. Once again, just so I can refresh everybody's memory, here's XOM. RCL, F, NRZ, VIC. All of that's mentioned on the 24th. It was $31. Well, no, not yet. Nope, 33. 33, 33, 33, 34, 34, 34. All right. So 2 days later, you could have, today, it's $39.17. Is that not 10% on your money? Is it add $3.40 to 34? That would be 37. So obviously you make more than 10% on your money, but better yet, the dividend, even at $39, is 9.33% for ExxonMobil Oil Company. This is a travesty that it's this low, or was on the 24th travesty. 23rd and all that was a travesty. Because we all know the petrodollar. So again, you have an opportunity where you could have invested 100, 200, whatever, 1,000, 5,000, it doesn't matter. Whatever you have to invest, you could think long term and say, okay, I'm going to earn 10% on my money, 9% on my money. Federal Reserve has 0% rates. Your bank will not be giving you no 5%, 10% any longer. They'll barely be giving you 1% or 0.01% any longer. So this is a great way to make sure you earn something on your money. Now, something else I mentioned is a bonus. Wells Fargo, WFC. This is a bank. It's a Fed bank. You've heard me mention this several times before. And on the 24th, it was at $26. 26, 26, 27, 26, 26, 27. Okay, Now it's $30. And again, it's another one of those things, 10% on your money. If you wanted to sell today, you take your 10% and run. Or do you let the dividend of $2 a year and earn 8 or 9%? If you'd have bought it $27, then you would be around 10% on your money. You'll be under 10. I think it was 9% actually. So 9% on my money is what I'm going to be earning because I'm not getting rid of it. It's a Fed bank. How often will it be this low again? This is the worst time, and it still only goes down to 25. So it's a Fed bank. They're always going to get bailed out. So they're not going to go to zero. And they give dividends. So I want them to give me 9% dividends. Because at Wells Fargo, I guarantee you can't walk in the bank right now and get past 1% on your money. But yet I can buy their shares and get 9%. Or today you can buy their shares and get 7%. So you start thinking about it. You're walking in your investment bank, Wells Fargo investment section, and they go, hey, you got $100,000, right? Come over here. We'll help you out. Meanwhile, they're not helping you out. They're not saying, hey, just go buy $100,000 worth of our stock and you're going to earn 7% or 8% on your money. They're not going to say nothing like that. They're going to say, no, we'll keep your money locked in here for 5 years and we'll give you 1%, 1.5% on your money for 5 years. That's what they'll be talking about. Come on. Wake up. Think like a CEO of my life. All right, ladies and gentlemen, I know this is long, but I hope you have learned a little bit more on what's going on and changing up your mindset about being CEO of your life. That way you think like a CEO. You think like a bank. You think like a lender. You think that way, so then that way you start investing in yourself instead of buying these material objects, these clothes, these shoes, these cars. Even a house is a liability, quite frankly. Once you start realizing what's a liability and what's an asset, then you start changing your mindset and go, okay, I can do without buying these objects that go down in value, that $200, that $500, that $600. You know, think about these flat screen TVs that people have all over their house. 5 years ago, 60, 70, 80-inch TVs were a couple of thousands of dollars. Imagine if you'd have had that couple of thousands of dollars sitting in a bank account, liquid, for all that TV and all those clothes and all the car payments and all that you had at your disposal at this type of time when you could have bought thousands of dollars worth of stock and you would have already doubled your money. And in some cases, you could have done better than double, but we'll just use double because even double is crazy. So imagine you had 5,000 sitting around and you had the cojones to invest and say, you know what, I'm going to listen to that Stop Struggling Now guy and do something in the stock market. And maybe I will do something with some of those things that he mentioned. And you would have said, okay, I put in my $10,000 and wow, it looks like this is worth $11,000 now. Wow, this looks like it's worth 12 now. So, whoa, wait, what's this, 15,000 now? At that point, are you like a 1%er? Are you going to say, you know what, I'm just going to let it ride because I get dividends? Either way, I'm getting X amount of money on my money that I put in here. It's growing for me one way or another. And yeah, it could go down, but I'm willing to take that risk. Or are you going to be like, okay, turning your money over to a 401k, hedge fund, mutual fund, and going, hey, you guys handle it. I'm just going to go to sleep and be happy that I got something that's going to be saved 30 years from now, or 25 years from now, or 20 years from now. So anyhow, with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. And this is why you have to start thinking about your different mindsets, your mind frame. You need to talk to your children. You need to talk to the grandkids. You need to say, hey, you're over 18, go get yourself these Webull and Robinhoods. At least when they get that free share of stock, they'll have an idea that this stock might be of importance, have some value. Because once it goes into their account and then they look at it and go, hey, I got a Snapchat stock, free stock. And by the way, I got a Snapchat free stock, which was kind of interesting because I never got a free share that was worth, it was like the free share I ever got was like, what is that? But when I saw Snap, I was like, oh my, they gave me something that's kind of cool. But you never know what the shares could be or what can happen later. So now you get a fun way for anybody 18 and over to start going, hey, maybe they're used to apps. They'll look at it and they'll say, okay, maybe they'll take it for granted, throw it out the window, never even open the app ever again and take it for granted they got a free share of stock. Not realizing that's a way to start their wealth well before they're 40, well before they're 30, well before they're 25, well before they're 55. And by the way, if anybody's like 60 or 65, you still need to invest. You still need to do something. You cannot let your money sit due to inflation. Your money goes down, just like when you go to the grocery store right now, things cost more than they did 2 weeks ago. So your money isn't worth as much. And now that they gave $2 trillion, put that in the money supply, plus the other $2 trillion, plus the money they're giving the securities, the bonds and all that, just call it about $4 to $10 trillion that they're adding into the market. There has to be inflation sooner or later. And of course, there's inflation all the time. You just never notice it. Your prices go up 1% here, 2% there, 3% there. And then when there's a crisis, a tornado, a hurricane, water shortage, some crises, then all of a sudden prices go up 5 to 10%. And you notice that big jump, but you don't notice the 1 to 2 to 3% jump. But it's happening all the time. And this is why you can have $1 million, but can you retire with $1 million? No. Divide $1 million times, let's just call it you live 20 years. You can barely survive on $50,000 a year right now. And by the way, that money that you take out of your 401k, your retirement account, is taxable. So that $50,000 that you thought you were going to take out for the next 20 years, try 40, try 35, as rent costs more, as homes cost more due to inflation, food costs more. You're not going to be very happy, and you're going to find that that's why there's a lot of people over 65 and 60 working part-time jobs somewhere, because they realized once they got around 65 and 70, they're like, man, my health is good. I could actually live another 20 years, and all I have is like $800,000 left, or $500,000 left, or $200,000 left, and they realize their life longevity is going to surpass what they have saved. So now you have to do something. So you don't want to be in that boat, ladies and gentlemen. You always want to think about being the bank, being the one creating money. That's what we do here. So keep your head up, keep moving, and I'm out.